In early April 2025, President Trump, seeking to fulfill his campaign promise of bringing back manufacturing jobs to America, announced sweeping tariffs on goods from almost all of America's trading partners. These tariffs, larger than many analysts had expected, sent shockwaves through the financial markets. Investors, fearing a global trade war and its potential impact on the United States economy, reacted swiftly and dramatically. The Dow Jones Industrial Average, a key indicator of the stock market's health, plummeted by almost 11%, shedding nearly 4,600 points in a matter of days. The S&P 500, a broader measure of the market, experienced a similar decline, falling by approximately 12%. The suddenness and severity of the drop signaled a deep-seated fear among investors about the potential consequences of the president's aggressive trade policies. The tariffs were not only aimed at traditional rivals like China but also at long-standing allies like Canada and the European Union. This broad-brush approach, targeting both friends and foes alike, amplified the sense of uncertainty in the markets. Businesses, facing higher costs for imported materials and components, grew increasingly anxious about the impact on their bottom lines. The uncertainty created by the tariffs rippled through various sectors of the economy. Manufacturers, heavily reliant on global supply chains, grappled with the prospect of disrupted operations and squeezed profit margins. Consumers, facing the likelihood of higher prices for everyday goods, grew increasingly wary about the future. The tariffs, initially intended to bolster American industry, seemed to be having the opposite effect, casting a shadow of uncertainty over the entire economy. Just as the markets were reeling from the initial shock of the tariffs, President Trump, in a move typical of his unpredictable style, announced a 90-day pause on most of the new tariffs, with the notable exception of those targeting China. This announcement, delivered via the president's preferred medium of social media, came after a tumultuous week in the markets and followed a particularly eyebrow-raising post from the president himself, suggesting that it was a great time to buy stocks. The market reaction to the pause was immediate and significant. The S&P 500, which had been on a downward trajectory since the tariffs were announced, surged by 9.5%, recouping some of its losses from the previous week. The Dow Jones Industrial Average also experienced a significant rebound, although it remained well below its pre-tariff levels. The pause, while temporary, provided a much-needed respite for investors, who interpreted it as a sign that the president might be willing to reconsider his aggressive trade policies. The pause, however, did little to address the underlying concerns about the president's commitment to free trade and the potential for further escalation in the trade war with China. The 90-day period was widely seen as a negotiating tactic, a temporary reprieve designed to extract concessions from China and other trading partners. The uncertainty surrounding the future of the tariffs, whether they would be lifted entirely, modified, or reinstated after the 90-day period, continued to weigh on the markets. While the pause provided a temporary boost, the damage had been done. The initial shock of the tariffs, coupled with the ongoing uncertainty about the future direction of trade policy, had shaken investor confidence. Businesses, while relieved by the pause, remained cautious about making long-term investment decisions. The tariffs, even in their temporary abeyance, had introduced an element of volatility and unpredictability into the markets, making it difficult for businesses to plan for the future. The imposition of tariffs and their subsequent pause threw the American economy into a state of limbo, characterized by mixed economic signals and a pervasive sense of uncertainty. On the one hand, certain sectors of the economy, particularly those directly impacted by the tariffs, began to feel the pinch. Manufacturing activity slowed as businesses grappled with higher input costs and disrupted supply chains. Consumer confidence, a key driver of economic growth, also took a hit, as consumers, worried about the potential for higher prices and a slowing economy, tightened their purse strings. On the other hand, other sectors of the economy seemed to be weathering the storm relatively well. The labor market, a key indicator of economic health, remained robust, with unemployment remaining at historically low levels. Consumer spending, while down from its pre-tariff levels, remained relatively strong, buoyed by a strong labor market and low interest rates. The overall picture of the economy was one of resilience in the face of uncertainty, with certain sectors feeling the pain while others remained relatively unscathed. The Federal Reserve, the central bank of the United States, found itself in a difficult position, caught between conflicting economic signals and facing pressure from the president to lower interest rates. The Fed, tasked with maintaining price stability and full employment, had been gradually raising interest rates in recent years, trying to normalize monetary policy after years of near-zero interest rates following the 2008 financial crisis. However, the trade war and its potential impact on economic growth complicated the Fed's calculus, forcing it to adopt a more cautious approach. The Fed, in response to the growing uncertainty surrounding the trade war, decided to hit the pause button on its rate hiking campaign, signaling that it would take a wait-and-see approach before making any further moves. This decision, while welcomed by some, did little to alleviate the underlying uncertainty surrounding the economy. The Fed, like everyone else, was in uncharted territory, trying to navigate the unpredictable waters of a trade war and its potential impact on an otherwise healthy economy. As the 90-day pause on tariffs entered its final weeks, the future of the United States economy remained shrouded in uncertainty. The Trump administration, true to its unpredictable nature, had sent mixed signals about its intentions. On the one hand, there were reports of progress in trade talks with China, raising hopes that a deal could be reached before the pause expired. On the other hand, the president continued to extol the virtues of tariffs and threatened to reinstate them if a deal was not reached, injecting a dose of skepticism into the markets. The markets, reflecting the uncertainty surrounding the trade war, remained volatile, subject to wild swings in response to every tweet, statement, and rumor emanating from the White House. The Dow Jones Industrial Average, which had regained some of its lost ground after the pause was announced, remained well below its pre-tariff levels, a testament to the lingering anxieties about the trade war and its potential impact on the economy. The S&P 500 similarly continued to experience bouts of volatility, reflecting the fragile state of investor confidence. The uncertainty surrounding the tariffs had a chilling effect on business investment, as companies unsure of the future direction of trade policy adopted a wait-and-see approach. Capital expenditures, a key driver of economic growth, slowed as businesses held back on making long-term investments. This reluctance to invest, if prolonged, could have a significant impact on economic growth, potentially pushing the economy towards a recession. The future of the United States economy, in the age of Trumpian trade policy, remained highly uncertain. The 90-day pause, while providing a temporary respite, did little to address the underlying tensions and imbalances that had led to the trade war in the first place. The markets, reflecting this uncertainty, remained volatile, subject to the whims of a president who seemed to relish disruption and unpredictability. The economy, while showing signs of resilience, remained vulnerable, caught in the crossfire of a trade war with no clear end in sight.
Hey, we all want to scale our business. Hey, I have the answer for you today to help you do that. If you're looking to scale from 5, 6, even 7 figures and beyond, book called Be Good, Be Brief, Be Gone. I'm going to give it to you for free. All you have to do is type in growfast.cash. I say again, growfast.cash, and you can download the book for absolutely free. I hope the book helps you this year. Take your business to the next level. Again, go grab the book, growfast.cash. I say again, growfast.cash. I wish you the best and grow, scale, and win.
There it is. Magnum. Holy moly.
Yeah, baby! That's what I've been waiting for!
Dear God, it's beautiful.